Okay, good afternoon, everybody. Today is Wednesday, the 5th of May, 2011. Actually, it's the 4th. And let's take a look at this market here. Sounds like we've got audio and video. So the S&P 500 is, as I'd said in the video on Monday, it's, the market was sending a message that it's time to get a little bit defensive here. We had it pretty easy the last week and a half prior to that with this other rally, but obviously we've come back down below the 5-day moving average, and we have this pattern of lower highs and lower lows. So it's not in a good position right now to make new purchases for swing trades in terms of the S&P 500. If we take a look at what we were talking about, this again, the direction of the 5-day moving average is a great clue for the intermediate term. And when we're making higher highs and higher lows above it, that's when we want to get involved on the long side. And I think I said in that post, or I said somewhere on Monday or over the weekend, that the last rally we had was finding good support at that rising 5-day moving average, and we wanted to wait for a pullback before we got long because it was getting a little bit extended. Obviously, the Osama bin Laden news got people excited on Monday morning at the open, but if you take a look at the volume weighted average price for week to date, which would be 3 days, that volume weighted average price right now is about 135.60. So the average participant is down in the S&P 500 as far as new longs go for this week. We can take a look at where this market bounced today. It's pretty interesting. A couple things came together. One was actually pretty close to the daily S2 level, but actually that was more important, I suppose, in the E-mini futures. Anyways, back to the SPY for a moment. Let's take a look at the 10-minute time frame, and we can see that what we'll do is we'll do two things. We'll do a volume weighted average price since the lows of basically this month, and we can see or not this month, but since this little rally began, and we can see that we came right down to that level, and that's where the buyers showed up in the S&P 500. We can also take a look at the Fibonacci off of this low to the high, and we can see that 38.2% retracement also came into play in that area, which was generally where we were looking for support based on again this neckline that we've been talking about of the inverted head and shoulders pattern. So we've got this market that had a nice rally here. We've pulled back 38.2%. Trade closed right near that rising 10-day moving average and this prior resistance. So we want to see that 134 kind of hold as support here. I think going forward over the next couple days, there's really no evidence that this market, today's little strength in the afternoon is anything other than just a short-term bounce, because we're right at right at that volume weighted average price for the day, but on that 10-minute time frame, we have a little downtrend here. We have lower highs and lower lows. So the market is still sending us that message that it's time to be a little bit defensive in here. We've got an important level at 134 that we want to see hold. If we got below it, and came down maybe to 33.80ish, I think that if we were to close or trade below 33.80 for more than a half hour or so, then we would risk maybe a bigger pullback. But again, with a weekly chart that looks as bullish as this, it's hard to imagine that it's going to fail. What we want to see is that this market is currently correcting price wise. We like to see maybe some sideways action through time in here. We've got a lot of the earnings out of the way, but we're still seeing that there are strong reactions to earnings reports. We saw that in the momentum name, well, just more than a momentum name, but open table today kind of blew up here a little bit, and a lot of the momentum names have been coming in a little bit, but you can't just look at one of them and make bearish conclusions because open table is down. You have to look at the flip side, which is Green Mountain Coffee Roasters, which continues to just annihilate short sellers in there. This stock gapped up once again, and if you just look at this monthly chart, an amazing trend in here that just will not give up as people are really on the Krups or whatever it's called bandwagon and makes coffee convenient. I don't even want to pretend I know a lot about the fundamental story, but it's a pretty simple one actually. Anyways, let's go back to the market here. The SPY, we'll be looking for support down near that 20-day moving average and that 3380-ish area. The 20-day moving average is currently 133.55. The Nasdaq, for its part, was only down a dime here today, and it continues to consolidate underneath these, this prior high. And here we'd obviously broken out and made some new highs, and now we're consolidating here a little bit. The level in here to keep an eye on is still this $58.30 level basically. If we take a look at the volume weighted average price, since these lows were made, we can see that was generally an area where we found some buyers in there today. So I think though that 58 or 20 is that general area that we want to continue to see hold as some support in the Nasdaq. It's still too early to buy for this pullback. There's a lot of stocks that have kind of, they've gotten annihilated here the last couple days, and it doesn't mean necessarily that they've topped out, but there are deeper pullbacks that have ruined a lot of good charts, and they're going to just need some time to heal and set up. The Nasdaq chart isn't one of those. We still have a decent looking chart here for the Nasdaq. The Russell is the one that's pulled back deeper, came down close to that 50-day moving average today. Also, if you look at actually that was the volume weighted average price from this low, and that's not really even what I meant to draw, but that's interesting. I was going to draw a trend line that looks like this. That you can see it's holding that trend line for now, and taking a look at a 30-minute time frame, this pullback has obviously gotten deeper, and this is what gave us a little bit of reason for caution on this market overall, was the deepness or the early weakness that we had seen and the harder weakness that we had seen in the Russell 2000. If we take a look at the Fibonacci in here from this recent rally, they tried to close it near that 61.8% retracement. It wasn't happening, but on the 10-minute time frame, we've got a very clear pattern here below a declining 5-day moving average, and that clear pattern is lower highs and lower lows. So it's not quite neutral in the intermediate term yet, so there's no reason to be looking for the bottom. This is an area where we would look to maybe find some support because the 50-day moving average is there, because the volume weighted average price off these lows is there, the trend line is there, but it doesn't mean that we want to be a buyer yet. We want to look for the intraday evidence that the buyers have regained control. And in the case of the Russell 2000, we closed below the volume weighted average price for the day, and it's just not looking like it's quite ready to bounce yet. The semiconductors were up 16 pennies today. There was another takeover in that group. This is the big level for the semiconductors, this $36.80 level. And so far, it looks like it's holding that rising 10-day moving average. It's experienced a shallower pullback, and I think that if these things get above and hold above 36.50 for a half hour or so, that we're going to have a likely test of this resistance, and then we'll be looking at the weekly chart to say where does this thing have the potential to go before it's likely to encounter some supply. And here's where we are. We could make a nice little pop above this level up towards 38 or so, and I think that the semiconductors are set up probably more bullishly than other most other groups right now. Certainly more bullish than the financials, which are having trouble with that declining 50-day moving average at the in here. We'd seen that rally, and now we've got it in here. We've broken that support at 1630. So what I said to subscribers last night is, if we get back below and hold below 1630, then it looks like this is a market that's basically transitioning from a stage 2 uptrend on the intermediate term, stage 3 distribution, and stage 4 decline. So it looks like the financials should be heading back down. I think it would take a move back above at least 1635. So if you're shorting it, I think that that 1635 level is probably an area to protect yourself with a stop. The big volume in this market, the big interest continues to be in precious metals, silver in particular. It's dropped 20% in 3 days. We're down. we closed the regular session at $38.27 for SLV, and right now I see it's trading 38.46. But this stock, this market, what I'd mentioned this morning on the blog was a couple things. One is, we're right at that 50-day moving average. You can see the 50-day moving average is 37.88. Today's lows were 38.01, so we came within 13 cents of that. And these are, again, trying to find and pick a bottom, pick a turning point can be an extremely maddening, frustrating thing when you look at something, a market, and say, wow, look how much it's down. Look, we're down 20% in 3 days, and it's down too much. It should bounce at the 50-day moving average at this retracement or whatever. I'd pointed out the let's show. I'll do it kind of in order. But what I'd shown was the volume weighted average price since the market broke this resistance here on February 17th. What we had seen at that point was that this was a potential level of support. That is the volume weighted average price. Well, obviously we broke down through that, on the open and stayed below that level for the entire session. So that really didn't matter too much. What I'd also mentioned was the volume weighted average price year to date, which is right now $37.71. So I think in this general area, we're getting towards an area where we're likely to see some kind of support. Because we've got that 50-day moving average right there. We've got the volume weighted average price year to date. We had the daily S2 was another level I'd mentioned down here at 37.52. But another level is that if we go deeper than that year to date correction, a lot of times these things do that, is they'll go they'll go down through a big level that people are watching, like the 50-day moving average, and a 50% retracement of this move of the year-to-date range. That is, so from the January lows to the highs last week, a 38% retracement. Well, we cut right through that today, so we would then look at potential support down here at about $37.17, which is a 50% retracement. So, there's still maybe downside risk of $1 in this SLV if it's going to bounce in this area, but there's no guarantee that it's going to bounce or that it has to bounce. We're still in a pattern of lower highs and lower lows in here, and right now there's no evidence that the buyers are gaining control. Today we had seen silver below the volume weighted average price for nearly the entire session, and the market ground up to that volume weighted average price and found resistance right at that level, and here basically closed right near the lows of the day. After hours, I'm not even going to pull up a tick. Well, I will pull up a tick chart. We're at 38.50 right now, but the tick chart is it's ridiculous. I was looking at a tick chart today and had to set it to 1,000 ticks. Sometimes I'll put a 50 or 100 tick chart, but anyways, the silver trade, it's extremely risky. As I mentioned yesterday, I thought it was kind of ironic that a lot of people who were trying to short it all the way up were the loudest ones about picking a bottom in here. And there's definitely that appeal that you get something down 20% and you've got this massive volume. I mean, it's a great trading vehicle right now, massive volume and volatility, but it's clearly not for most people. It's not appropriate for most people. And what we have to remember, again, like I said in the post this morning, was that these levels, the 50-day moving average, the 50% retracement, year-to-date volume weighted average price, and that sort of thing, they're not levels that you want to say, okay, that's my buy point. That is not the right way to use technical analysis. It's an area of interest. It's like profiling for people of interest in a general group at the airport. These are people of interest. Well, these are areas of interest where we want to say, okay, let's take a closer look at the shorter term time frame. Is it finding support at prior resistance levels? Is it finding resistance at a volume weighted average price? Or the buyer, does it push up through there, pull back, and then make a nice pattern of higher highs and higher lows? And then what's the next potential level? It couldn't make it up to a 2-day volume weighted average price up near $40. Anyways, it's very dangerous, it's very risky, but it's obviously something that most people are in. It's trading 150 million shares a day. Basically, what is this? 5 out of the last 9 trading sessions. It's trading more volume than the SPY. So there's a lot of interest in it. Just be careful and trade it not based on emotions. Trade it based on technical analysis and looking at the evidence of supply and demand. So I've spent enough time on that. Let's take a look here. Let me take a look at Twitter real quick and see if you guys have stuff that you're popping in here. And let's see. Thank you, Chart Diva. And let's see. Diamond 303. What's going on with the Chinese internet stocks? Curious about your ideas. You got to be more specific for me on that. I'd be happy to take a look at one or two that you have in mind, but there's a lot of Chinese internet stocks. So Sina, Sohu, Yoku, Dang, whatever. I'm not going to look at them all, but if you want to put something in, meanwhile, I'll look at these other ones. Hunt wants me to take a look at SYMX, and I think Hunt, you asked me about SYMX. Last time, and I remember saying that this thing is extremely dangerous up here. That it's it was starting to break down and show signs of trouble. It's broken below some support. It's below a declining 5-day moving average. It's a speculative stock that ran up real quick, and now we're getting a pullback. Where this thing pulls back is anyone's guess. But right now, the money's coming out of this name. It's got strong downward momentum. There are going to be opportunities to trade this thing for a bounce if that's your game. Very similar to some of the Indian names, like and I can't type right, so. Anyways, similar to SIFI and Rediff, that these things came down hard and they got some bounces today, but they're hurt stocks. They're deeply wounded here. I don't think you're going to see new highs on this stock for quite a long time. I don't know the story. Clean Coal, Chinese company, I think, or something like that. I think it's an extremely dangerous stock. It's trying to pick a bottom in it is going to be as difficult as trying to pick a bottom in SLV. So use some of those same techniques and say, is it going to come down to the 50-day moving average and find support? Is it going to find support near the volume weighted average price since this movement? And that's where we are right now. So this might be an important level. So since this move began, here's the volume weighted average price. So let me just start that again. Since this move began, there's your volume weighted average price. So on average, the average participant, and it doesn't, of course there's people that bought it down here, but if you're dollar cost averaging, or anyone who bought above this line obviously is losing money, but that's the average price. So on balance, there's net sellers actually since the stock rallied. It doesn't make sense because it's up a lot, but that's the average price. I'll take a look at one of those for you, and I'll take a look, Diamond, at let's take a look at Ren. Here's an IPO that came public today, and you have to look at this thing. Where'd they price it? I don't even know. They priced it, it gapped way up, pulled back. It's having trouble with its volume weighted average price. I think this 20 level is going to be an important level, but I'd stay away from it for a while. Let it settle in. It doesn't have much trading history. Sina. Let's take a look at Sina. Sina's in this giant uptrend. It's getting a pullback in here right now. We've still got a rising 50-day moving average. It's just one of these momentum names that's had a huge run and is still in an uptrend, but it's not in a good position to be bought. If we take a look at the volume weighted average price year to date, we've got that level. If we take a look at the Fibonacci, from year low to year high, 61.8% retracement brings us in towards that volume weighted average price. It looks like it's still got a little bit of further bleeding. It's below declining 5-day moving average, making lower highs and lower lows. It broke some important support in this 125 level. So if it can get back above 125 and hold in a half and hold above there for a half hour or so, then maybe it's something worth considering for new purchases. But I wouldn't be buying into the weakness. To me, this could be the next silver, where people are trying to catch the bottom in silver, and it keeps declining. Just because it's down a lot doesn't mean it can't keep going down. We've had huge rallies in these stocks, and letting a little bit of steam off, I guess, is the right way to look at it. It's still technically in a bigger uptrend, but when you look at the shorter term time frames, we've got lower highs and lower lows, and an important level of intermediate term support was broken there. So I guess I would stay away from it for now. Johnny Utah is saying, would you have closed out the S trade? No, and I didn't. Johnny, what I'd said on Twitter today was, when this stock was at $5.20, I said it looks like it's in a good low risk position with a stop near 505. So had it broken below 522, no, but the point was a stop near 505. That's, I'm not gonna give individual stock specific advice. You have to look at this and say, does Sprint make sense for me personally, Johnny Utah? Well, if you look at the weekly chart, what's going on here? We've got this longer term base that if we're going to break past this level, someone tweeted about they've got this great new phone coming out for their 4G network next week, and it's a good looking chart. It looks like maybe it could head up towards the $6 level. So maybe there's 10-15% upside, but the point is, if you're gonna raise your stop, that's up to you. I would say if you're looking at a volume weighted average price, maybe since this level right here, since that move began, that's not the higher low. I think that you want to look at in terms of a higher low and manage the risk according to the way that with what you're comfortable with. Maybe you sell part of your position if it breaks below there, but again, I said 505 was what looked like a reasonable stop, and you look at the potential upside. I think that makes sense to still have a stop down near 505. If you want to manage it tighter, then that's a personal feeling of about what you would do. What I would do is really not the point, because I'm just giving you an idea and saying, here's a stop, take it or do whatever you want with it, but have a stop and then manage the risk yourself. What I would say is, if you get it back above these highs here recently and you bought it at 520, maybe you want to raise your stop up to that level or up to break even. But it looks like it should be able to continue to move higher. It's looking bullish pretty much on every time frame that you look at. So otherwise, Johnny, it's just micromanaging. I can micromanage my account, and we can all be our worst enemies in that regard. But let's take a look at APKT for Obi-Wan Kenobi or whatever it is here. Acme Packet. Here's a stock that's had one of these. It's had one of these massive rallies. It's just been a huge uptrend in here, and it's starting to let a little bit of steam off, similar to Cena and Sohu and some of these other leaders. Now, I look at this and say, it looks like maybe it broke out to new highs, similar to over here, and it's going to have a little bit of trouble. And it's a stock that is right on its 50-day moving average, right on this trend line. So it seems like it should find some support in here. But similar to Cena, it's below a declining 5-day moving average. I wouldn't be buying it in here. It needs some time to prove itself and to reset up in here and see if it would be able to potentially find its footing and reestablish some strength that would be it could reestablish some strength and move higher from there. Anyways, I wasn't talking too good there, but it looks like that's all I can see here on Twitter that anyone has sent in. Thanks everybody for tuning in. We'll talk again on Friday, and trade well in between. Thanks.